So the last auction for the year, for the financial year 2025-2026 is coming. This is the last time Bank of Uganda will be selling off a 10-year treasury bond in the primary market, the 20-year treasury bond in the primary market in this financial year. Remember, our financial year as a country, Uganda, it starts from July 1st to June 30th. So the June 10th, June 11th is the last auction for the financial year before we go into the next financial year 2026-2027, which is coming with significant changes. But the focus for me is on the June 10th, June 11th. Now, it has been an amazing year for treasury bond investors, especially the first half of the year. I remember we opened the auction on July 9th, July 10th. At the time, they sold off the 20-year bond. They brought back the 10-year bond, which people loved, and the 3-year bond. And they are closing the year with the same exact bonds. When you look back at all the financial year from July 10th to where we are right now, especially the first half of the year, the first half of the financial year, which was the July 1st to December or to even January 22nd, majority of the auctions that were done at that point, they were very, very, very good. You remember, we opened up with the 20-year bond at the time. It brought in a yield, a cutoff yield of 17.9%. At that time, the discount on the 20-year bond was over 15%. It was actually coming to 16%. For the person who bought the bond on July 9th, they enjoyed a 16% discount. That's how good it was when we started the financial year. Right now, we are closing the financial year with the exact type of bond. So I wanted to paint for you a picture for you to see how has it been. If we go back to July, August, September, October, November, how has it been? When you look back almost 11 months ago, on July 9th, when Bank of Uganda auctioned off the 10-year bond, it came in at 17.1%. Now, the 10-year bond has a coupon rate of 16.25%. The last few times we have seen it being auctioned, it has been at a premium. So for the people who want to buy this bond, this is going to be the last opportunity that you do have to get that 10-year bond that has a 16.25%. Remember, and this is important, this is a 10-year bond that recently paid a coupon. You get the 10-year bond, the 2035-year bond, it paid a coupon. It paid a coupon in May 21st. So by the time they will auction it off on June 10th, it would have at least some accrued days of around 20 days, so which are very few, so that for anyone who is looking for that bond and lock in a very good coupon rate, that is a good time to buy it. I always talk about coupon rates it's always important to buy a bond which has a higher coupon rate, because in the future, when the time comes when you want to sell such a bond, you always recover majority of the money you put in, or it can even help you make a very high premium. But when you look back 11 months ago, on July 9th, when it was auctioned off, the first time they brought it back on the market, the 10-year bond, it had a 17.1% cutoff yield. When you compare that with the recent auction that it was, when it was auctioned off in April, and you're like, you know what, let's look back on the last time it was auctioned off, because it was last auctioned off, it was first auctioned off in July 9th, then it was recently auctioned off in April. It was on April 15th. The 10-year bond brought in a 15.5% cut-off yield, and people ended up paying a close to 11% premium. So what is it going to be this time around in the primary market? We shall see. But when you look back at the last financial year, we had amazing 7 months. From July, August came in, August was interesting because that's when they introduced the 25-year bond, which brought in a 16% coupon rate and cut-off yield, which felt like we had been robbed, because what do you mean 16% in August 2025? And we had a very steep yield curve, because those who bought the 15-year bond got a 17.65%. Those who bought a 25-year bond, which is a longer-term bond by 11 years, got a 16% coupon rate and cut-off yield. And the majority of the bonds got rejected, especially from the institutional investors, who do competitive bidding. But on June 10th, we are going into the last auction of the year. Now, there are a few candid questions people have to ask themselves, especially when you are to buy, especially the 20-year bond. The 20-year bond that is going to be auctioned off on June 10th pays a coupon on July 9th. Yes. So you buy a bond, and 1 month later you get paid a coupon. It can work in your favor, it might not work in your favor. The question then becomes, what is the anticipatory cut-off yield? Is it worth, is it worth it to buy the 20-year bond in June? Or is it better to sit on your cash or put it on your unit trust on the money market fund and you wait for the new calendar? So, is it better to invest in June, for example, in a 20-year bond that is going to be at a premium, but which premium you have an opportunity to recover on July 9th? And knowing that this is going to be the last time that potentially 80% chances are it's the last time that Bank of Uganda is going to be selling this bond, the 20-year bond. They are going to introduce a new type of 20-year bond. Is it better to buy in June, especially if you have the cash? Or should you wait and you buy the bond in July? And you buy the new bonds that will be introduced, especially potentially the 15-year bond that will be introduced on July 2nd. There are some decisions you have to make there. They are not easy, but they are decisions that you do have to make there. But as I was taking, we are looking back at how the financial year has been. We opened the year on July 9th. The 20-year bond at the time brought in a 17.9%. The 10-year bond brought in a 17.1%. You look back at the last time it has been auctioned off on April 15th, the 20-year bond brought in a 16.098% cut-off yield, and the 10-year bond brought in a 15.5% cut-off yield. We are in the second phase of the year, of the financial year, where interest rates are coming down, and they're going to continue coming down. The question becomes, is it time for you to invest? Is it time to leave the money in the unit trust? Is it time for you to wait for the new financial year? Will it be much better? Will it bring in better opportunities for investors? Those are decisions you have to make. But if we continue looking back how the year has been really, really good. On that same exact bond which we are talking about, the 20-year bond, we have talked about it when it was auctioned off in July. Now let's look at it when it was auctioned off in September. On September 3rd, the 20-year bond peaked at 17.95%. People got a discount of close to 15%, 14.5%. It was around 14%. That was the closest to touching 18% cut-off yield. To so many people, they had never bought a bond that has an 18% cut-off yield. Very few people have it. The 10-year bond, 17.1%. Amazing times which they were at the time when we were investing. That's how the year has been. Right? So we start with July, 17.9, 17.1%. We come to September, 17.95%, 17.15%. You see? Then you come back, you're like, okay, how did it continue? Then we come to October. Do you remember the October auction, which was there? Actually, it was November. When did they last? When did this auction off the? Because they auctioned off on September 3rd. We came to October. On October 1st, this is 2-year, 5-year, 10-year. Then we went to October 22nd, Treasury bill. October 22nd, Treasury bill. We went to November. Okay. We came to Jan. Yes, it came back in Jan. Of course, here it is on Jan 3rd. It brings in a 16.25%, and a 10-year bond brings in a 16.75%. The 20-year bond brings in a 17.625%. The 10-year bond brings in a 16.75%. And since then, interest rates have been coming down. Of course, we enjoyed some interest rates in in March because of the war, but now the squeeze is back. So as you prepare for this last auction, the question is one: do you invest in these outgoing treasury bonds? Potentially, we might not see the 10-year bond again because that's a high coupon rate. I do not see the Bank of Uganda and the Minister of Finance bringing it back at 5 years from now as a 5-year bond with such a high coupon rate of 16.25%. The 20-year bond for it will come back on the calendar. It might come back as a 15-year bond or as a 10-year bond, depending on how they will see fit. Should you invest in those, or should you wait for the full calendar that is coming at the end of June that will start us on the financial year 2026-2027? Either way, the decision is open. The market is open and we are ready to invest. Whatever you do, if you have some capital, invest in the treasury bonds. They are making money. We are going to be talking about the unwinding of the financial year. The budget is now fully out. I will do a few videos over the weekend to talk about the debt and is it starting to pose a significant risk. How do you look at the portfolio? We shall talk about the Sukuku bond and the opportunities it's bringing. The Sukuku bond is going to be an offshore, off-balance sheet borrowing by the government, and they are planning to raise significant amount of capital in there. All those plus so much more. But this is the place to be.